nobody's really ratcheting down their estimates on holiday spending. And yet on my screens right here, look.
Oh.
That's going to be a blooper reel.
We just had a flood.
We just had a flood on set because I tried to get cute with my computer.
Flood.
Anyway, the average retail stock is down 17% this quarter. How come? And a mop?
Yeah, we clean up aisle 7. Expectations going into the fourth quarter were incredibly high. I mean, everybody's comping, the consumer's in a great place. I'm just going to help you mop a little bit while we talk.
Got you a mug. It's empty.
But the problem is the expectations. So, you know, Lululemon comped up 18%, and the stock traded off. You know, Ulta comped up 8%. The stock traded off because we know the consumer's strong. We know they're out there. They're the darlings of retail. But the question is, into 2019, what's next? Is this as good as it gets?
Move your phone, by the way. I see the flood.
Gosh.
The flood. The full.
Somehow there was you have to buy me a new
somehow
phone.
There was 16 gallons of water in this mug that is now just making its way around the Worldwide Exchange desk. Okay, 2 ways to look at retail stocks. Number one, they're doing what you said, which I suspect. Or number two, they're telling us a scary story about what's to come, that the market is looking out and going, uh-oh, we're in trouble, economy, recession, whatever it is, sell them now.
I don't know if we're looking at recession, but we definitely are looking into 2019 saying the consumer is as good as it gets in 2018. We've had a really good setup. And what about next year? Do we get tariffs? If we get tariffs, then we have to go for price increases, which the consumer may push back on. We know that freight's up. We know that now you're going to face these really tough comparisons. We know that while retail is not dead, there's still a ton of store closings that need to happen, whether it's Gap or Victoria's Secret or JCPenney. So there's still more pain to come. And it's very difficult. Oh, thank you for my refill. I'll keep it far away from you.
It's dangerous. Keep it away from me.
Far away from you. And, you know, so you look into next year and say, you know, there's no way we're going to comp the comp.
For example, Tiffany, right now on this, I'm not going to touch the computer again, don't worry. Tiffany is down 34% this quarter.
Yes.
Is Tiffany's business 34% worse now than it was 2.5 months ago?
Absolutely not. But there are fears out there that the Chinese luxury consumer is slowing down. They certainly pointed to in their quarter that tourism slowed down in New York, in Europe. So there's this fear factor. Oh my God, is the customer that's 30-something% of their business drying up and going away? That is clearly not the case. But again, there's just this fear out there.
Yeah, you know, speaking of that, and I'm not knocking on Brian Cornell at Target, but it's sometimes you get maybe unlucky with dates, right? Brian Cornell of Target was on CNBC, I don't know whether it was a month ago, 6 weeks ago, and he famously sort of said on Squawk Box, it was the greatest consumer environment that he had ever experienced in whatever 30 years in retail, something to that effect.
Right, yes.
Target stock is down 22% again this quarter. Are we seeing this massive disconnect between what the consumer is doing and what the stock market is doing? Because if we are, one of those will be a wrong view.
Sure. And I think, you know, that's part of the problem is that everybody's out there saying how great everything is. But, you know,
the greatest consumer environment in his retail history.
You're teeing everybody up for expectations that you just can't meet. So they put up a 5.5, consensus was 5.6, and the stock sold off huge. So you have to kind of settle down, be a little bit conservative going into these earnings reports. But there's no question the consumer is still spending, but we're going to see cost pressures. And as you and I talked about before, just because you have top line growth doesn't necessarily mean you have bottom line growth if your cost structure is growing.
You expect a rebound of some kind at some point with these names?
Some of them. So I still like Lululemon.
Ulta, you love.
I still like Ulta. You know, certainly they were a little more promotional than the street would have liked. You know, you still got the Kylie effect going in there, and you still have a company that's tempered expectations, which is a good thing. So we're going into 2019 in a realistic manner.
Well, I don't know, Stacey, when I'm going to see you again, so I want to give you.
I don't know.
Can we zoom in on this? We just got these nice new Worldwide Exchange mugs. It is now empty due to my error.
You just wanted to draw attention to it.
So I want to present you with this mug. Merry Christmas.
Thank you so much. I don't know that I'm coming back to visit you.
Merry Christmas, ever. Remember when I guaranteed I wouldn't spill water on you?
Yeah.
That was a lie.